Hello, my friends. This is Doug Fabian. Welcome to my weekly ETF report. Today is Thursday, May 7th, 2015. Thank you for joining me today. As always, three things to talk about. Next week, I leave for the Las Vegas Money Show. I'm excited to bring the great message of exchange-traded fund investing to the thousands of attendees that will be participating. And I wanted to bring back a message to you that I haven't talked about at all time. And that message is, should you continue to own your mutual funds? Now, I realize that you don't have access to ETFs through your 401k, but maybe you own some mutual funds directly. I really believe that every single position in your portfolio should fight for its life, meaning that you should prove beyond a shadow of a doubt that the mutual fund that you own is providing you value, doing so at a reasonable cost, and that you understand the investment objective and the risks of that mutual fund. Because in almost all cases, I'm going to say in 80%, even 90% of cases, you'd be better off in an exchange-traded fund than you are in an open-ended mutual fund. So the first message I have for you today is check out your mutual funds, and if they're worthy, hang on to them. If they're not, transfer that money into exchange-traded funds. Now, let's talk about the financial markets in topic number 2 today, and I want to discuss the subject of risk. I believe that we're entering what I would call a mid-cycle correction. This is a correction in an ongoing bull market. The correction could be greater than 10%, but it could be in the 3 to 5% range. I just look at the market indices, and so far, the U.S. indices are down anywhere between 3 or 4% from the highs that they reached in the month of April. This is very typical of this time of year. May and June are not great years seasonally for the stock market. The stock market is dealing with the threat of higher interest rates in the Federal Reserve. It's dealing with the threat of slowing economic growth and weakening earnings numbers. There's just not a lot to be hopping positive about in the financial markets right now. And that's the kind of environment that you get a mid-cycle correction in. Now, the reason why this is important is because this bull market, especially during the last 4 years, has been relatively correction-free. So all of a sudden the stock market could fall 3 or 4% in 1 week and you're like, hey, what's going on? What's happening? I want to tell you that this is normal. It is normal for stock markets to correct. It's 2 steps forward and 1 step back. It is not straight up all the time in the stock market. So don't allow a mid-cycle correction to throw you off or get you upset. Lastly, I wanted to talk about some investment themes. These are the themes that I'm going to be talking about when I go to the Money Show next week. I'm still a big believer, if you have cash in your portfolio, that you could be using this mid-cycle correction, this pullback in prices, to put more money to work. My favorite themes are still international over domestic. And the international markets are just a better value than the U.S. stock market is. I like the emerging markets. And again, emerging markets have been very out of favor in the last 3 years. And then finally, over the last couple of months, I've been talking about China and India as 2 markets that are entering new bull markets. You have to realize that markets go through bull and bear cycles. The bull cycle in the U.S. is 6 years old. The bull cycle in China is 1 year old. The bull cycle in India is 1.5 years old. So those are what I consider to be 2 countries that are entering new bull markets. They've already had some upside growth, but the potential is still great. And I want you to look at those as you're putting together your watch list to put new money to work. That's it for me this week. Tune into my podcast out at etfu.com. Check out the ETFU database and send me your emails. My email address is askdoug@dougfabian.com.